So, hello everyone, can you hear me?
Yes.
Yes, okay. Thank you for joining the Africa Financial Industry Summit Capital Markets panel today, Africa's new gold mine in a post-COVID world. So today we'll indeed be talking about capital markets and the role they play in helping Africa face up to the COVID challenges and the role they play in the post-COVID world. At the height of the crisis, back a year ago, we saw equity markets slowing down under the effect of the general lockdown across the world, and debt markets taking over with specifically tailored tools. And that's what I really want to talk about today, how COVID accelerated market trends already at work, such as the development of social bonds. In March last year, on the same day the World Health Organization declared officially COVID-19 a world pandemic, IFC issued its largest social bond, a 3-year $1 billion social bond with a coupon of 0.5%, which was largely oversubscribed in spite of extremely turbulent market conditions at the time. End of March last year, the African Development Bank issued a $3 billion denominated Fight COVID-19 social bond. It was the world's largest social bond at the time of issuance, and it was also largely oversubscribed. Since 2017, the bank has launched nearly $5 billion worth of such instruments denominated in US dollars, euros, and even Norwegian krone. West Africa Development Bank issued on its part a 750 million euros sustainable development bond in January this year, and it was 6 times oversubscribed. On a country level, Côte d'Ivoire issued, for example, several oversubscribed COVID-19 social bonds. So we are seeing investors showing strong appetite for these bonds, which alleviate social issues, such as, for instance, financing, aiding SMEs. And we are going to look at the regulatory implication linked to them. Over the period, we've also seen Benin, Morocco, and other countries coming again to the international debt market with improved conditions, as well as African corporates like Liquid Telecom. And we've also seen African investors such as pension funds investing more and more in local markets and proving there's increasing potential on the domestic front too. So capital markets are key in mobilizing private capital to finance COVID recovery and beyond, growth and sustainable economic transformation. Successful money raising is about trust in the issuer, and that's also what we'll be talking about today. How does an African country, an African corporate build its investor profile? What are the risks associated with being a developing country or being a corporate in a developing country? I'm thinking, of course, about currency risks and how they can be mitigated by issuing local currency bonds, for instance, which is also, for that matter, attracting increasing international investors' interest, and which is also another topic we'll be raising today. So there's a lot to talk about, and joining us today to discuss all of these themes is Neza Hayat, former international banker, sovereign debt expert who currently chairs and manages the Morocco Capital Market Authority since 2016. Mrs. Hayat is a former president of the Moroccan Association of Securities Dealers and currently sits on the National Council of the Moroccan Employers Federation, where she promotes women employers' interests. And also with us today is Félix Edo Amenouvé, a seasoned financier, managing director of the Bourse Régionale des Valeurs Mobilières since 2012, and also since that time CEO of the Central Depository and Settlement Bank, as well as president since 2020 of the African Securities Exchange Association. We also had the pleasure of welcoming from IFC, a partner of the Africa Financial Industry Summit and a long-standing partner of Jeune Afrique Media Group Africa CEO Forum, John Gandolfo, who's Vice President Economics and Private Sector Development and Treasurer of IFC. Mr. Gandolfo's team manages over $100 billion in liquid assets, global market borrowings and derivatives transactions. He's a former director and chief investment officer of the Pension and Endowments Department of the World Bank. Mrs. Kate Hensey is our fourth speaker and our representative of the private sector today. She's been Group CFO of Liquid Telecom for over 12 years and also held the position of Chief of Mergers and Acquisition in that same group. She's a chartered accountant and began her career at KPMG before following on to internal audit at Cable and Wireless. And we also thank her for making it today. And finally, we also have the honor of having, I hope, as our special guest today, the Minister of Economy and Finance of Ghana, Rogu Al-Wadani, which I see on screen, great, who will be joining us later in the panel for a special question and answer one-to-one session. So if it's okay with you and without further ado, and bearing in mind the audience can ask questions via the chat, which I hope we'll have time to answer at the end of the panel. Let us start with you, Neza. How did capital markets react to the COVID crisis in Morocco, and how did the authority respond?
Hi, well, good afternoon, everyone. First, let me thank the organizers for inviting me to contribute to this distinguished panel. And Guy, as you said, reminded the 2020 was turmoil for all markets worldwide and also in our continent. Well, for Morocco, as a regulator, and as a capital markets authority, our first mission is to ensure that capital market activity was resilient, that infrastructure were resilient, and that despite the remote organization of work, all the rules of a fair market to protect investors could still be followed by all market participants. So this is one of the challenges we had to address. The other one, as there've been some panic, uncertainties are a nightmare for markets. We did a kind of fine tuning. We decided to reduce the maximum variation of stock prices in the market from 10% to 4%. Of course, this is a temporary measure, which we have not removed yet. We will still every day we try to find out, but we don't have all the answers yet to come back to a normal time. What was important for us, because this is, I should say, it's one of the pillars for trust, is the information to be disclosed by the issuers. Remember, it all started in March, more or less, when issuers have to publish the annual reports, their ESG reports, and we supported them to make sure that they were able to publish first to organize their board of directors on a remote way, and for this we had to amend some laws for corporate laws, but also to insist that they had to publish for the trust, for the trust of the investors, which mainly all did. And it was a challenge, especially for the ESG report that became mandatory for the first time last year. So, what we have initiated all together, because at the same time that we had to make sure that the market was resilient. We also made sure that the asset managers could make some stress tests that proved the resilience. You know, the asset management industry is very important in Morocco. The assets under management represent 50% of the bank deposits. So it was important to have this stress test. But moreover, we started building for the future, saying, okay, capital markets, they're not financing, they're financing less than 10% of the economy and investment. So maybe this is a special momentum for banks will not be able to finance everything, to adapt our tools, our financial tools, our markets to finance the relaunch.
Okay. All right. Okay. Thank you. Over to you now, Felix. Did you find that there was a resilience from your point of view in African exchanges in the face of the COVID crisis? Can you tell us about the measures that were taken to mitigate the effects of the pandemic, and also how governments and even the private sector relied more on the debt market starting that period?
Thank you, Gaël. Good afternoon, everyone. Thanks to Jeune Afrique Group for organizing this summit. As you say, financial markets over the world were submitted to a tough test since the beginning of the crisis last year. As there is some uncertainty on the impact of the crisis on the real economy, the MSCI World Index dropped 30% in March, and we recorded on the continent a decline around 10%, even if in some countries like Egypt, Morocco, or Namibia, we experienced 20% of decline. Since April, we saw a kind of upward trend that continue to the end of the year. The most important thing to note is that during this period, the African stock exchanges have adopted some measures to mitigate the crisis. The first one was to change or to adapt the compliance requirements for listed companies. For example, we allow them to postpone their AGMs. We put in place also some circuit breakers on some exchanges, and we allow also some of our brokers to place orders online. We make some recommendations to some listed companies on the policy of dividends, on how to disclose the profit. Very important to build confidence in the market. We also our business continuity plans at all levels to our staff remotely. As you can see, any of our exchange on the continent doesn't close a single day crisis. That is important to notice. I think that all these measures contribute to reduce the volatility on African exchanges and also to maintain the trust in our market.
Okay. So now, thank you. Now I really want to move on to the big acceleration today we're seeing in social bonds coming onto the market to actually help alleviate the effects of the COVID crisis. So over to you, John. IFC played a key role in elaborating the social bond principles. Can you tell us about IFC's experience as an issuer of those social bonds, and what indeed are the regulatory challenges at stake with those new products? Bearing in mind that we have to keep the answers to 3 minutes, please.
Thank you very much, Gaël. And I'm very pleased to be here today and to participate in this distinguished panel. Every year, IFC borrows around 17 billion in the global capital markets to fund loans to clients. Around 20% of our long-term borrowings are issued in green and social bonds. And the proceeds of those bonds fund select eligible projects with clear environmental or social benefits. Driven by investor demands, the green bond market has grown exponentially since the first issuances over a decade ago. In 2019, green bonds were issued about 250 billion to fund climate investments. And also in 2019, IFC hit a milestone of crossing over 10 billion of green bond issuances. 2020 was a very different year. It was the year of social bonds. The onset of COVID-19 impacted the social bond markets in a similar manner to COP21 on green bond issuances. COVID-19 put a spotlight on socioeconomic issues that social bonds were really created to help mitigate. And social bonds are now front and center of the sustainable bond market. They offer investors an opportunity like green bonds. However, they fund projects that provide or increase access to essential services like healthcare, water, finance, et cetera, for the underserved. So social bonds made up only about 5% of the sustainable bond market in 2019. But in 2020, they jumped to almost 148 billion of issuance. And the way the market is going in 2021, it could be as much as 200 billion or more in 2021. In response to the emerging pandemic, as was mentioned earlier, in March 2020, IFC did issue a 1 billion social bond. It was our largest to date. It was heavily oversubscribed, and it really showed the enormous interest by investors to support the alleviation of social issues. And IFC has spent and has actually played a foundational role in the development of the green and social bond principles. And one aspect that I want to really emphasize in the green and social bond principles is the direct line of sight from the issuance of the bonds to the projects that are being financed. And that is a fundamental aspect of the green and social bonds. And it's one that investors ask issuers to adhere to. Thank you.
Right. So this is the really the key, one of the key subjects we're going to be raising today, social bonds. Beyond the immediate measures, indeed, that were taken by the Moroccan authorities, also by the BRVM, these I see are the long-term tools which are helping Africa to face the COVID challenges and, of course, beyond. So, Neza, back to you. The Moroccan Capital Market Authorities is not new to social bonds, and you published the Green, Social and Sustainability Bond Guidelines back in 2019. Can you tell us about the authorities' priorities in 2021? I understand AMMC also recently published the Gender Bond Guidelines, and I know that's a topic dear to you. Is that going to be also high on the agenda this year? Is that going to be a way to advance women financial education and literacy?
Well, we hope so, Gail. As you said, as you mentioned, we since COP 22 in Marrakesh, and in line with the strong commitment of the country to promote sustainable development, we have been launching with IFC a series of green bonds starting in 2016 that enabled a certain number of issues, followed by a green, social, and social bonds in 2019. And well, this is part of our strategy to promote the use of the wide range of financial instruments that we have and that could meet both the demand of the enterprises, but also the requirements of the investors. Although we have a market that is based on local investors, institutional investors, basically, we have more and more foreign institutional investors. So the priority is to promote this range of financial instruments with more innovation and to focus especially of access by SMEs to the capital market. So of course, then I can quote, you mentioned the gender bonds. Yes, we issued, not with IFC this time, but we have, although we're doing a lot of things with FSD Africa, we launched with the same principle that we do for the social and green bonds, a gender bond guideline, to promote projects by women, women empowerment, and to promote also all the SDGs goals regarding women and regarding gender equality. And this guideline has been followed by the first issue, while a bank has announced, BCP, Banque Centrale Populaire has announced the first issue of a gender bond, and the funds will be used by the microcredit subsidiary of the BCP to finance women. Innovation is important and will be a priority this year because we need to adapt. Also, we need to mitigate the new risks that this pandemic has known, and at the same time, we need to develop capital markets for the financing. And today, there has been the release of a very innovative securitization fund issued by OCP Group that we authorize, and that the OCP will use to guarantee 80% of the loans that will be taken by its providers, mainly small and medium-sized companies. So many priorities, this focusing on how to follow or to anticipate the needs by the companies to finance their investment, the relaunch of the activity, and also the investors, knowing that this year His Majesty announced the creation of the Mohammed VI Fund for Investment that will finance private equity funds and that finance a certain number of sectors. So capital markets will be hugely used, and it means more challenges, more issues regarding supervision, and also the use of technology.
Okay. All right. Okay. That's really interesting what you're saying about this new securitization fund for OCP, and it provides me with a transition over to you now, Kate, and the private sector. Tell us indeed about your perspective and Liquid Telecom's journey to the debt market as a private company. End of February, Liquid issued the $840 million bond. It was the second time the group came to the market. So can you explain for us the overwhelming success of Liquid's new bond?
Thank you, Gail, and good afternoon, everyone. Well, our original bond was taken out in 2017 and was due to mature in July 2022. So we knew we needed to come to market to refinance prior to the bond becoming current in July 21. With a lot of macroeconomic headwinds in 2020, largely due to the pandemic, we decided on a strategy whereby we were going to try and gain as much investor confidence as we possibly could before we came to market. Increasingly, investors are focused on environmental, social and corporate governance matters, as some of the panelists have mentioned before, and these are core to Liquid Telecom's operations. So we actually approached the IFC along with DEG and EAIF and asked them whether they would like to participate in the bond refinancing, and we managed to get all three of them on board. I think this helped in two ways. First of all, it gave a signal of confidence to the market, and second of all, it reduced the amount of the bond that would be available once issued, so it really helped to drive the demand. We're also lucky enough to have a group of core investors who'd been in the bond since the first issuance. So we spent a lot more time on investor relations work, making sure that people could understand our business model, dealing with different African economies, sometimes in local currency and not in US dollars, is something that investors do see as a risk. So we had some work to do, although we believe that our diversification across lots of different markets and the growth potential in sub-Saharan markets in Africa that we're in, they really speak for itself. In the week that we were due to come to market, however, we saw the US Treasury start to move against us. And having seen the impact that a moving market can have on emerging market bonds, we decided to accelerate our timeline, and we came to the market on the Monday with the aim of pricing on the Wednesday if the order book was sufficient. Within the first hour of opening on the Monday, we'd already covered the full order book, and at its maximum, we were over 5 times oversubscribed. Our greatest success, though, was the coupon. Our original bond was at 8.5%, and due to the overwhelming demand, we ended up at 5.5%, which is virtually unprecedented for a B-rated issuer in the economies we're in. And this will give the company real cash savings and help us drive our growth strategy forward even quicker. Thank you.
Thank you, Kate. That's a fascinating story about indeed African private corporates coming to the market for the first time, and we'll be returning a bit later to regarding the actual structure and the fact there were 2 tranches, and we'll be talking about that again a bit later. So now I just want to get back to you, Felix, concerning the African market's resilience during the COVID. You saw that more and more African insurance brokers, pension funds and others invested more and more in local markets. So I want to ask you now is, do you see that as a longer lasting trend, and what measures can be taken to make those operators stay there? I'm thinking about countries like Namibia, Ethiopia, Lesotho have indeed passed legislation to oblige pension funds to invest in local markets. If you can elaborate.
Thank you, Gail. Yes, I think that one of the impact of this crisis is the fact that we saw many of our international investors going out of our markets by selling massively their position on our equity market. That is normal because they wanted to be repositioned in their domestic markets because of the risk aversion. For me, the good news is that in many of our markets, Nigeria, Botswana, BRVM, etc., our local investors, insurance companies, pension funds, sovereign funds, compensated this situation by coming massively in our market. One of the lessons I think that we have to learn from this crisis is that we need to rely on our local institutional investors. We need to give them the opportunity to participate in the market very actively. For that, it is important to see how we can make some effort in terms of legislation, as you say, in Lesotho, in Ethiopia, etc., to have them participating in the market massively. But I think that is important also to note that we need to develop the retail investor base, because these retail investors can also compensate the situation of these international investors. So it is important to use these new technology tools like we saw it a few years ago in Kenya. And finally, I think that is important also to give some fiscal incentives to issuers that want to raise money in some priority sectors or strategic sectors for our countries, like health, education, etc. Because I think that these measures are very, very important to develop our market and also to allow our issuers to come massively in African capital markets.
Yeah, that's fascinating, and we really want to see that trend lasting longer. So transitioning over to you, John, can you explain to us IFC's work indeed with local African regulators in supporting local capital markets development, such as indeed attracting pension funds and other local investors and enhancing the regulatory environment? Can you tell us in particular about IFC's flagship capacity building program, JCAP, Joint Capital Market, which is focused, among others, on Morocco and YMU?
Yes, the capital market development and local currency financing is a very big priority and focus for IFC and the World Bank Group. In fact, over many years, IFC has been able to make local currency available in over 70 currencies, and we see this growth very much going forward because local currency financing is good for companies and good for markets. It helps manage risks. The JCAP program is a fundamental part of our capital markets development work. It is a joint World Bank Group program that is focused really on supporting the coordinated development of local capital markets. It aims to deliver coordinated World Bank Group-wide work as a combination of diagnostics, technical assistance, and related demonstration transactions that really reinforce policy reforms and crowd in the private sector. The JCAP program has active investments and advisory operations in a number of areas in Africa, and in particular in the WEMU region, in Kenya, and in Morocco. In addition to the JCAP program, we undertake targeted advisory work in a variety of countries. In one of my last trips before the pandemic arrived, we did one of those sessions in Uganda. And in addition, we run a capital markets postgraduate education program. And this is a program that we've done, that we organized a couple of years ago between IFC, the Milken Institute, and the Education Institute is the George Washington University in Washington, D.C. And we take applications and bring in mid-career regulators, capital markets authorities, individuals, and they go through a couple of months of capital markets education work and then do an internship. So far, we've trained 105 regulators from 42 countries, and this summer we're starting a French-speaking program in Paris with Paris Europlace and the University of Paris Dauphine.
Okay, well, that's fascinating. Just returning shortly to local currency bonds, Kate, I want to get back to you and concerning your latest bonds issue. Back in 2017, there was just one tranche, but if I'm not mistaken, but this time in 2021, there were two tranches, one of which in rand-denominated term loan. Can you tell us more about the advantages of going local and elaborate as a concluding note on what you think local currency bonds are going to be developing in the future?
Thank you, Gail. Yes, our first bond was taken out purely in US dollars. And at the time, the company was a predominantly US dollar denominated company. As our South African operation grew, we started to see a mismatch in our FX exposure. So if the rand depreciated, which over the long term it does tend to do, our debt would stay the same because it was in US dollars, but our EBITDA would fall. And by the time we got to 2021, 42% of our revenue was in South African rand. The majority of the rest of it was in US dollars, and the remainder was in various currencies across the African continent. So we could take out hedges to move the money from rands to dollars, but hedging part of the coupon from US dollars to rands and vice versa was expensive, and we were dealing with a very volatile currency. So one of our aims with this refinancing was to try and ensure that the mix of our debt better matched the mix of our earnings. And it was something that was very important to our investors as well. So we decided to reduce slightly the amount of the US dollar bond and take out a tranche of ZAR lending alongside it. In terms of local currency bonds, I think this could be a particularly valuable form of financing for companies going forward, but particularly in somewhere like South Africa where there are exchange controls. So there's a lot of rand circulating in the local market looking for investment. We actually would have loved to explore a local currency bond as the profile of non-amortizing debt suits a growth company like ours much more. But unfortunately, at the time we were coming to market, only the 1 year and 3 year bond would have been accessible to us as first time issuers, and that tenor wouldn't have suited us. There are 5 year and 7 year bonds, but they're more common amongst the seasoned issuers in the market. We were also advised that floating rates are more common in the market linked to JIBAR, and again, that wasn't something that was hugely appealing. South Africa also uses its own rating scale, so we would have needed to go through another ratings process and decide whether we used a local company, our local company, and if we'd done that, we would have had to convert it to a public company to do the bond. So I think there's a number of regulatory issues around those bonds that need to be worked through, but I think ultimately it remains something that should gain in prominence as time goes on.
All right, okay, so I've noted that we should watch out in future for liquid telecom going into a local currency bond. Okay, so now we're going to hold our speakers debate, and I'm going to introduce Romuald Wadani, Benin's Economy and Finance Minister, for our one-to-one session. Romuald Wadani is an auditor and US certified public accountant who began his career at Deloitte, where he became a partner at Deloitte France. He founded the Deloitte offices in Kinshasa and Lubumbashi, DRC. Within the audit group, he worked as Global IFRS Director, that's International Financial Reporting Standards, ensuring international standards are applied across the Deloitte network in Francophone Africa. And starting 2016, and his mandate as Minister of Economy and Finance of Benin, he worked on streamlining the country's public finance. Donc, bienvenue, Monsieur.
So, Minister, welcome. Thank you for taking time to speak to us. Now, we're a bit behind schedule, so if I may, I'd like to ask you the following question. How is the action plan doing business that you launched last year? How is it working in the face of the current crisis? Has there been in government developed tools that are specific to a plan to face to help local community during the crisis? Thank you very much, Gail. Before answering your question, I'd like to thank your speakers and really congratulations to Kate, because what you've done with Liquid Telecom is quite impressive, and the way in which you describe it should be an inspiration to many other companies, especially in Western Africa. I would also like to thank John for his G4 program. It's a revolutionary program. IFC has integrated French-speaking countries. Actually, one of the members of my office is going to join your program in September. So thank you from the bottom of my heart. To answer your question, most countries have benchmarked themselves during the crisis. No, we didn't reinvent anything new, you know. In Benin, three things are characteristic for 2020. From March onwards, we made the choice to protect our populations and the economy. So we worked very closely with all companies, and we implemented measures to safeguard jobs and allow companies to continue functioning. The second thing that's so important is that all these measures to support the economy had one finality: to make up for the consequences of the crisis, to prepare the economic recovery, and to reduce the weight of the informal economy, which is very present in our country. So we supported formal and informal companies, and we focused on creating measures to create incentive measures to reduce the weight of the informal economy. third thing, we have decided to keep our attention on reform. In 2020, we had 22 new reforms that covered the digitization of transformation of a business climate, 22 strong, significant reforms. All economic activity slowed down, so we made the most of this to accelerate a series of reforms. In consequences, 2020, our deficit was less than 7%, and the growth rate was 3%. So it's one of the most positive figures for most of Africa, and it's one of the lowest deficits. So those are the three characteristics of the actions we carried out in Benin. But we looked at everything that was done by everyone, but these three things are specific to what happened in Benin. That's a perfect transition to my next question. Is there a Benin exception? You managed, after all, to reach a 31-year maturity. It's quite exceptional. It's your the only other country to reach this kind of bonds yield for on this. So what lessons can we draw to this experience of Benin on the financial markets? Well, I think it's a result of three things. The first is the trust we've slowly but surely built with the markets. We started communicating with international markets from 2017 on. We started preparing commercial loans, and in 2019 we launched our first Eurobond. From 2017 on, we communicated a budgetary and growth trajectory to the markets and a series of reforms that needed to be carried out for the transformation to take place. And every year we have delivered. So we really focused on reform for budgetary consolidation. So one year after the next, the international community congratulated us on these efforts, and they commended these efforts by more and more adhesion. So there's firstly this trust we've developed over time with a financial market that's linked to the quality of the management of a public finance and the rigor in the pace of reform. Moreover, Benin was known as a country that was very much dependent on Nigeria. And this dependence on Nigeria could actually be an opportunity. So we launched a series of reforms that allowed us to reduce the weight of our dependence on the economy. We decided to develop new activities that created jobs and wealth. I believe that the borders were closed with Nigeria during the pandemic. Yes, all through 2020, the borders were closed. So the reforms that we'd anticipated on this with Nigeria reached their maturity, and they've produced reforms. So all the promises we made to the markets, we'd say we've developed our economy to be less dependent on Nigeria. And 2 years later, we closed the borders. But in 2019, before we closed the border, we had a growth rate of about 7%. In 2020, despite COVID and closing of the borders, we've got one of the best growth rates in Africa, more than 3%. That's the second point. The third point, Mount. For financial markets, we know what we want and we stick to it. Every time we go on a financial market and we've got proposals, we invest 1 billion euros and we have offers for 4 or 5 million. We focus on what we want. We rigorously stick to our debt strategy, our debt agenda. We respect this very closely. The market really likes this because it allows the market to be able to know what we're doing. We develop our capabilities. We can anticipate. So these are important factors for the regulation of the market. Brilliant. Perfect. And our position and the discussions on the debt also had an effect. So we say that the time has come to think of new instruments. We well, like what's happened, and we thought it was a nice opportunity to think out the box. I was reading to prepare this panel, and you said you weren't necessarily in favor of this initiative to suspend the service of a debt. We were in favor of developing other products. Final question, a very brief one, because we're behind schedule. What will be the financial strategy of Benin for the future? Is Benin going to have a bit more advantages for the market of a local debt? Now, just off the top of my head, the total external debt of Benin is, the total public debt is slightly more important, well, outside of Benin than inside Benin. Are you going to rebalance that? For us, there are two things. We think that the peg on the euro and the CFA franc allows us to have a debt that's both euro and CFA and not dollars and other currencies. So we have tried to be as invulnerable to shocks and fluctuations as before. Every time you need to raise funds in euros or from CFA francs, it's the same thanks to this pegging we have on euros. We prefer euro. The euro and dollar market is far cheaper. We never considered that because one of our principles to manage our debt is to limit risk linked to the fluctuations in currency effects. And we want to be dynamic and proactive. If in the future, at every closing of the financial market, I look at the evolution in share prices, if we have a possibility to get out, we will do it. We are constantly monitoring. That's our strategy. We've had a real reprofiling operation in 2019. It was beautiful. We did it with World Bank. Thanks to the World Bank, we were able to raise debt to pay back another debt. That allowed us to save 50 million euros. That was dedicated to school lunches and helping the population. So we're working to help the populations. Our efforts are focusing on helping the populations. So we will do things either to finance things or to modify our old debts. It's possible. Our conditions of access to the market don't improve much, and every time things improve, we go to a market, we take debt, and we change our debt to replace old debt. So it's a dynamic debt. That doesn't want to take too many risks, or at least not on currency effects. And we're internal and international market, but with the euros, it's pegged on euro. Thank you so much for this overview of the Benin exception. We will continue monitoring the Benin story, which is quite fascinating. Thank you so much.
With our speakers for this panel, final home stretch, we've only got about 10 minutes left. John, considering all that we've said so far, would you say that debt markets, be them international or be them local, come first foundationally in Africa and that they are the preferred markets for the continent's development needs?
So both debt and equity markets have a significant and critical role to play in the capital markets in Africa and frankly in all countries. From a capital markets perspective, bond and money markets are foundational. Institutional investors generally are more comfortable with these markets first before taking equity risk. Bond markets and yield curves are important for the development of derivatives markets as well. We've been talking here about the importance of local currency financing, and collectively well-functioning money markets, bond markets, and derivatives markets really do enable companies to fund themselves using a variety of instruments, and quite importantly, in the domestic currency. And that's particularly important if revenues are primarily in the domestic currency. You know, bond markets also and established yield curves are very important components in the valuation of equity markets. But capital markets don't always develop in this way. The development of bond markets are complex, and care does need to be taken in that they're developed in an organized way. And obviously, eventually, equity markets should be expected to grow to be a significant composition of the capital markets. I also want to say today that countries and companies have to be very concerned about taking on excess and unsustainable debt. So there is a balance, and this has been a very important discussion in the last year as the COVID-19 pandemic has made even clearer the importance of debt sustainability going forward. But it's important to recognize the role that African capital markets need to play in the post-COVID recovery, channeling needed capital to good companies in order to support a sustainable recovery.
Okay, great. I think just going back to Benin shortly, the level of the countries in this panel was the overall global risk of international debt for countries in Africa. Benin is, as the minister said, really looking out to carry on concessional credit agreements and of course sticking to the euro, as the minister said, because of that precious euro peg. So okay, to look ahead, Neza, I want to look at a more regional perspective on the African continent. What do you think are the regional challenges and initiatives needed for African capital markets for the future in a post-COVID world, especially considering the African continental free trade area coming on stream? Can you tell us about your experience as chair of the Africa and Middle East Committee of IOSCO, the International Organization of Securities Commissions? Yeah, please go ahead.
Okay, well, I happen to share this African and Middle East Committee since March 2020, so it all came at the same time. Well, we have all basically challenges of fragmented markets, and Felix knows more that very well that we all are situated in bank-based financing economies with low liquidity, small capital markets, and with the challenges of financial literacy, capacity building. And today, I think there's this momentum, and I think that now we can play in the continent as capital markets more crucial role. It means for the continent of all the regulators, or at least those who are part of the committee that I chair, issues of developing initiatives to contribute to strengthen protection for investors, to improve regulatory framework, and also to reduce regulatory gaps if we want to tomorrow to attract more investors and to have more cross-border transactions. There are so many priorities, but for this year, what we decided is that our priority will be, well, there's always one, which is the capacity building, not only for the market participant, but also for everyone, for investors, to help understand more what are capital markets for, what is their role, what are the financial instruments. Sustainable finance is also key to promote these capital markets and access and to have a more exclusive capital markets to finance all segments of the society. And fintech, especially with it can be an opportunity, and especially new instruments like crowdfunding. In Morocco, we recently adopted the legislation for crowdfunding. So
okay, great. So we've only got about 4 minutes left to wrap up this panel. Felix, just following on with what Neza just said, what is your perspective on the integration of capital markets in Africa? Can you tell us more about the African Exchanges Linkage Project the BRVM has been involved with. I think your mic is off. You've got to activate your mic.
Yes, sorry, my mic was low. You can hear me now? As I said, we have two fragmented stock exchanges on the continent. We have 29 exchanges for 54 countries. These exchanges are illiquid also, are part of GSE. So it is for that reason that we decided to integrate our exchanges on the continent. We have a project that we call African Exchanges Linkage Project that is supported by AFDB and financed by a Korean fund. This project aims to give a larger market to the continent. Also to improve the liquidity in our market and to give access to our brokers to all the markets at the same point. That is very important. Actually, we have 7 exchanges that are pilot exchanges in this project. We started it 2 years ago. Actually, we are close to the session phase where we will integrate these 7 exchanges: BRVM, Morocco Exchange, Egyptian Exchange, Kenya, Nigeria, South Africa, Mauritius, Egypt. We believe that if we achieve this project by integrating our market, our investors and issuers will have a larger market, a competitive market, and we can also balance long-term financing this market. Because as you know, our countries used to go to international, our market not very deep on the continent. But we have some different countries of mobilizing long-term investment. A lot of money in Botswana because this country has a very cheap pension fund institutions. We have money in India, etc. Our objective in also. So objective is to how we can move from Nigeria, Morocco to BRVM to Kenya, etc. I think that a very great achievement for our continent.
Okay, I'm going to interrupt you now because we've just been. I just want to ask the last question, Kate. The final word is with you, and I think it transitions beautifully from what the different challenges Felix just mentioned. So here's the big question, Kate: is Liquid Telecom considering a listing? And tell us what would be the advantages for Liquid Telecom to go public, and whether an African exchange would be Liquid's preferred place for listing. And of course, I have in mind the Johannesburg Stock Exchange. And if not, why not? In a nutshell, what are Liquid's needs and expectations? So your mic is off. Oh, can't hear you. No, still can't hear you.
How about now?
Oh yeah, great, thank you.
Sorry, it stopped working. Look, I think a lot of commentators think that an equity event of some sort would be a natural progression for the company. You know, obviously I can't comment publicly on any future plans, but I do think for companies like ourselves, once you've been experienced in the public debt markets, and I think John touched on this as well as Felix. Once you're used to the quarterly reporting, you've gone through a ratings process with ratings agencies, you've done a lot of the preparation work that's needed for a public equity event. And I think, you know, something that's been touched on by all the panelists is the level of debt that a company, feels comfortable taking on. And I think, when you're at that type of level, then the other markets that you need to start looking towards are equity. So in terms of advantages, I think the obvious one is to be able to tap into additional capital in a way that is obviously not affecting your leverage, your debt leverage, and obviously liquidity for the company's shareholders. In terms of African exchanges, look, a lot of the exchanges across Africa, including South Africa, have actually done remarkably well over the last year, despite a very volatile year, and in many cases have outdone their European counterparts, largely driven by some of the mining and technology stocks, particularly in South Africa, that dominate the index. South Africa is our largest market at the moment, but we've got a lot of fast-growing economies in our liquids portfolio. The DRC is growing very fast. We're also looking towards West Africa, towards Nigeria and Benin and places like that. So there's a lot of other markets that will come into play. I think, there's still quite a lot that needs to be done on the regulatory front. And I know a lot of regulators are trying to make their exchanges more friendly towards secondary listings and capital raises. So, I think there's lots to keep an eye on.
Okay, so maybe I'm reading between the lines, but maybe I understand like a listing, not necessarily in Africa, but a secondary listing in Africa. So that's the word of the end. It's 16:43 here in Paris. Thank you so much for taking part in this panel, all of you. It's been a pleasure. I really worked hard to prepare and delve myself in the information and literature in capital markets. It was fascinating. Thank you so much. Please stay with us. There's lots of other panels and fireside chats, and I hope you enjoyed the end of the forum with us. Thank you very much.